Hello, good morning. It's Monday the 25th. I'm FX Blue and this is the market brief. So retail sales data was out on Friday and that fell by 1.9%. That's after a 0.5% fall in February. So the year-on-year position is just plus 0.9% now. And when compared to market expectations of around plus 3%, this illustrates the potential slowdown in the UK economy, especially as the higher energy cap is driving choices for household budgets. It was a similar story for the service sector data as well. That's been pretty strong over the past few months and it was up at 62.6 in February. This fell to 58.3 in March, which in isolation is still pretty strong, but as the sector makes up 80% of UK growth, concern over that decline is only natural. There are rumours suggesting that the Partygate report will be so damning that Boris will have to resign. For now though, the party chairman Oliver Dowden is supporting Johnson. He suggested that events at home and abroad are causing such disruption that a leadership contest would set the country back further. That's hardly a ringing endorsement for Boris's leadership though, is it? In the market, sterling reacted pretty badly to Friday's data. We fell to a 2-year low against the dollar. We dropped down to 128.25 there. We open even lower this morning, around the 128 mark. But we're up around 118.80 against the euro. Now, over in the US last week, Powell pretty much confirmed that the Fed will hike interest rates by 50 basis points next week. He also sees the merit of following that with another 50 basis point hike in June, all to help slow rising US inflation. The Fed will also start to reduce the size of their balance sheet, selling off their holdings in government bonds and mortgage-backed securities. And Fed officials have suggested that this plan of action, that reduction could be equivalent to about 2 further rate hikes, and that has seen many analysts, whoa, a bit bumpy there, many analysts raise their expectations of a US recession up towards the 50-50 mark. Concern whether the Fed will be able to react to any significant slowdown in economic activity is the key driver there. Last week, the dollar index reached its highest level since May 2020. That topped out at 101.33. This week, we've got a little more data on the calendar, so we can probably expect trade to pick up a bit now Easter is comfortably behind us. Euro dollar starts the new week down around 107.30 this morning, so everything to play for. That's it from me. Have a great week.
If you do not have a clue, then just tweet through and ask FX Blue.